Hi, my name is Mark Thomton. I'm the editor of the Illinois Real Estate Journal. Joining me today is Jacob Gehl, who is Vice President with the Senior Housing Group at Marcus & Millichap. We're going to be talking about the senior housing market, what it's doing here in Chicago, and looking at a national level.
My name is Jacob Gehl, and I'm one of the Vice Presidents at Marcus & Millichap. I cover the Midwest for our firm, and I specialize in the sale of senior housing facilities. Senior housing is really three businesses. Independent living is the lowest acuity of the three. Meals, and it's an activity. Assisted living is all of those things plus a little bit more, assistance with bathing and feeding and dressing. And then we also have the nursing home business, which is the highest acuity. That's for the sickest. That's for the people that have the most care.
Can you talk to us a little bit about what you're seeing across all three product types in terms of occupancy right now? You know what it did in the office markets, in the industrial market, anything like that. You see vacancy increase, rents go down. How did it affect the senior housing market? What happened in over the last 2 or 3 years, and where is it at today?
Sure, it's a good question. The senior housing business has been, like I said, it's really three different businesses, and each of those three businesses has been affected in slightly different ways. The need-driven businesses I think you've seen the least amount of disruption. I think that the housing crash and the issues relating to the housing market have more directly impacted the independent or the lower acuity business. In 2009, we saw a cross between independent, which is historically run at higher occupancy levels than assisted. In the third quarter of 2009, we saw those two pass each other. And as long as housing drags, I think you'll continue to see difficulties with occupancy in independent living.
Is there an oversupply right now, or do we get no problem overbuilding any facilities? And the other side, is there a demand for more assisted living facilities right now, or is the market kind of at what it can handle at the moment?
Independent and assisted both have moved from an occupancy standpoint somewhere in between the high 80s to the low 90s. So I don't think you'd necessarily make the argument that either product is significantly over or underbuilt.
So you're seeing a lot of activity, big purchases. What's the reason behind this? Why are firms making these moves right now?
I think the reason for the consolidation in the REIT space, and a lot of the big headline-grabbing transactions have been REITs. The reasons for seeing that are there are a few. Number one, I think there's been a flight to quality for U.S. investors. I think that there's been a sense of pulling money off the table into emerging markets. I think there's a sense that commodities have run really high. I think there's a sense that municipal bonds and other government bonds are going to potentially, and that threat may be overblown, but there's some perceived default risk. And when the average investor sort of look out along the investment horizon, U.S. equities feels like a safe place. And within the world of U.S. equities, REITs have been particularly attractive because of the dividend. The dividend has always sort of been what's in the secret sauce that has made REITs go.
Companies seem to be very excited about the long-term possibilities now. Is there potential down the road for the current financial problems to be a problem, to affect the industry long-term?
I think you've seen, for a variety of macro reasons, I think you've seen the middle class erode in the United States. And if you look at a lot of these REIT transactions, they're going after the higher end segment of the market, and there's a growing number of people that are coming to the realization that they're probably going to have less money and have to retire later. It is somewhat worrisome as an industry for us to think about how the boomers, albeit they're 15 or 20 years away from now, how are we going to be able to pay for their cost of care